How the postponed Iran conflict could unexpectedly boost or crash your investments in both crypto and traditional markets. Let's dive in. Hello traders, investors, and curious minds. Welcome back to Dr. Fred Markets, where we dissect today's seismic shifts in global finance. First off, if you're feeling the tremors of Dow futures jumping over 1,000 points, you're not alone. This is the wake of President Trump's decision to suspend further action on Iran for 2 weeks. This action reverberates through markets, from New York to Shanghai. Today we'll examine how these geopolitical machinations intricately tie your crypto assets to traditional stock market movements. Stick around as we dissect how global turmoil can potentially become your financial boon or bane. The spark started flying when Iran and U.S. tensions flared, causing oil prices to tumble dramatically. This ripple effect is quite evident in financial markets today. For example, USO, representing oil prices, sunk by a whopping 9.78%. When you consider these numbers, it becomes apparent just how monumental Trump's decision was to the global economic landscape. Why should you care about the teetering oil prices amidst geopolitical uncertainty? Well, lower oil prices are a double-edged sword. On one side, the drop might alleviate costs for various sectors that rely heavily on energy, providing a temporary boost. Think airlines and manufacturing, sectors that are heavy consumers of energy. But on the other side, energy companies can suffer, and that has repercussions across the market. Ever wonder why Asian benchmarks soared as oil prices sank? That's directly connected. Yet this volatile combination requires strategic navigation as an investor. Meanwhile, let's not overlook Bitcoin, fluctuating slightly downward at $70,926.92. The mild decrease of 0.28% today might appear diminutive, yet when juxtaposed with traditional markets, this stability could signal a haven of sorts amidst the unfolding drama. Bitcoin's capacity to function as a digital gold alternative becomes particularly intriguing against the backdrop of relative upheaval in stock indices. Ethereum also took a slight hit of 0.48%, landing at $2,179.73. However, crypto's mild fluctuations are dwarfed by massive moves in stocks like the S&P 500, climbing by 2.5%. Nvidia's price surge to $182.08 parallels this trend. Such robust performances demonstrate the dynamic interplay of sectors like technology and AI, seemingly overshadowing traditional energy as oil-plagued sectors take a temporary backseat. Yet, this surge in tech is a partial eclipse. Its full impact remains to be seen in how it aligns with crypto investments. This market dance raises the tantalizing question: how deeply connected are your crypto assets to these broader market trends? You might be holding Bitcoin today, but its early tensions reveal unseen correlations to traditional financial investments. So ask yourself, could a strategic balance between crypto and stocks be the ultimate lever in safeguarding your portfolio against global stability fluctuations? Before we explore this, let's ponder a pertinent economic angle: how today's announcement about Iran could be creating a bubble in more stable markets through investor volatility reactions. Before unfolding this knot, here's a pause for thought. Remember that diversification across various assets can be your key to mitigating risks during these tumultuous times. Whether through crypto or traditional routes, knowing when to pivot is crucial in episodic moments like these. As we transition from geopolitical impacts on oil and energy to the unclear yet intriguing connections between crypto and the broader expertly arched investments, consider this. In times of global uncertainty, decisions made in simplicity. Cliffhanger time. Will the oil price slash and crypto stability send ripples through your portfolio, or is a perfect storm brewing on the horizon? Hang tight as we delve deeper into these intertwining realms. Now, let's further inspect the dynamics of the Magnificent Seven meeting the Magnificent Few. For those unfamiliar, the Magnificent Seven refers to titans in the tech industry, whereas the newer few represent emerging leaders in sustainable finance. These forces are shaping investing paradigms, pushing investors to rebalance portfolios under emerging new realities. Recall that financial stability and growth don't exist in a vacuum, but are highly susceptible to external shocks. Traditionally, these shocks primarily involved physical commodities like oil or interest rate fluctuations. Today, Digital currencies, with their intrinsic global accessibility and influence, have notably entered this conversation. Your action plan, though, should be devised with the viewfinder aimed beyond fear and anxiety. Making investments that parallel oil dips might sound intuitive. However, coupling that with diversification into resilient sectors like tech or crypto can often reveal overlooked benefits. It's also pertinent here to note that while oil takes a downturn, essential infrastructure in crypto and tech sectors remain pivotal, driving their potentially sustained ascent. Therefore, scrutinizing how these trends converge might not just present you an investment path that achieves growth, but one that truly capitalizes on the dual opportunity of stability and volatility. Regulatory measures, especially in booming tech, need anticipative thinking, balancing growth with sustainable practices. Now, as we conclude, it's crucial to reflect. Where do you want to weigh heavier, traditional or digital? Here's the decisive action you can take. Assess your portfolio beyond just numbers and data points. Look at its resilience against today mimicking scenarios that could arise again tomorrow. Insert diversification strategically where needed. Finally, subscribe and share if this exploration encouraged you to think beyond numbers. Hit that notification bell for more comprehensive breakdowns of how geopolitics and technology intersect with global finance. Stay informed, stay ahead, and remember, every investment decision first begins with a thought. So, what are you thinking about now? And where will you let those thoughts lead you next? In this fast-paced financial world, the ability to adapt quickly and decisively is your greatest asset. Now that we've delved into the balance between traditional and digital asset management, it's time to harness this knowledge proactively. Start by evaluating the macroeconomic trends that could influence your portfolio's future viability. Are you factoring in how emerging market economies might shift the global balance of power? Are there technological disruptors on the horizon that could redefine the playing field overnight? Consider partnerships and technological collaborations to strengthen your market position. Networking with forward-thinking minds and organizations not only enriches your understanding, but also opens doors to innovative strategies and opportunities previously unimagined. Explore sustainable investing as a conduit for growth. With the increasing focus on environmental, social, and governance (ESG) criteria, aligning part of your portfolio with these values can enhance your returns while contributing positively to society. Engage in continuous learning and remain open-minded. The world of finance is ever-evolving, and new financial instruments, digital currencies, and evolving regulatory landscapes are emerging consistently. Make it a habit to read broadly, attend webinars, or participate in workshops and discussions. And remember, the journey of investment isn't just about acquiring wealth. It's about making informed decisions to secure a prosperous future. So as you weigh your options, think long-term, stay patient, and be prepared to adjust your sails to navigate the inevitable shifts in the economic winds. Thank you for accompanying us on this insightful journey. Keep exploring, keep learning, and as always, make your investment choices both wise and informed. See you in the next session. I'm Dr. Fred Markets, signing off. Until next time, continue to empower your financial journey with knowledge and foresight.